Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with a market update. The US dollar index hovered above 99.4 on Monday, marking its second straight week of losses. Traders are growing concerned that the backlog of economic data, which reveal a softer US economy, that weakness has been giving non-dollar currencies a lift. Even though senior Fed officials, including the Street, Louis and Cleveland Fed presidents, warned that inflation risks remain and hinted at keeping rates high for longer, the dollar failed to find support. WTI crude traded near $59.6 on Monday after surging more than 2% last Friday on geopolitical tensions. The rally was driven largely by Ukraine's drone strike on Russian energy infrastructure, forcing the key Novorossiysk port. Analysts called the attack one of the most significant in scale, intensifying fears of supply disruptions. Markets are also watching how Western sanctions will reshape Russian oil flows. Spot gold traded around $4,050 during the US session on November 17th. Prices pulled back as hawkish. Fed comments sharply reduced the odds of a December rate cut. Still, early week geopolitical risks. Last week's wild swings were essentially a double stress test: policy uncertainty and a data vacuum. Gold dropped to nearly 2% on Friday, but still held modest gains for the week. Analysts note that despite short-term turbulence, gold's long-term drivers, central bank buying, geopolitical fragility, and global diversification demand remain firmly intact. Yen was little changed after data showed Japan's economy contracted less than expected in the third quarter. The pair still faces intervention concerns, but uncertainty over the Bank of Japan's next rate hike has offered some support as the US dollar edges higher. The yen slipped to around 155.3 per dollar on Monday, near its weakest level since January. Japan's economy shrank 0.4% quarter on quarter, better than the forecasted 0.6% decline. Prime Minister Sanae Takaichi urged the BOJ to maintain low rates to support growth. Euro extended its second day of declines on Monday, trading just below the 1.16 level. The pair weakened as cautious remarks from Federal Reserve officials supported the dollar and reduced expectations for a December rate cut. Sentiment toward the dollar also improved after President Donald Trump signed a funding bill reopening the US government, ending the 43-day shutdown. European Central Bank official Olli Rehn warned that the risks of slowing inflation cannot be ignored, though he noted the Eurozone continues to grow steadily despite disruptions from US tariff policies.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.